Welcome to episode 130. If you're new here, my name is V Lee. This is the show where I interview upcomers, doers, and ballers of the real estate investing world. The purpose is to help you to reach your financial freedom in real estate investing faster. I learned from a very successful real estate investor that you gotta be flexible and take what the market gives you. In today's environment, investing in storage building is really popular. So I invited Luke Wong on the show to discuss just that. Join us as Luke shares about how he acquires his storage units, calculates his ROI, and manages them. All right, Luke. Oh my God, I'm so happy to have you here today. I know this show is pre-recorded and we had to deal with some storm-related weather issue this morning, but I'm glad we made it. How are you?
I'm good. Thanks for having me, V. Great. Yeah. No. I guess we're out of the tornado alert, so I think we're good.
Yeah. Hey, would you mind give the audience a quick introduction?
Sure. Luke Wong from Houston, Texas. I moved to Houston, Texas, 2001 from Florida, and that's where I basically started my actively engaging in real estate. I worked with a residential land developer doing land acquisitions for residential subdivisions. Did that till about 2011. Then after that, I started renovating and flipping homes for, let's say, probably about another 5 years. So 2015, 2016, we had a couple storms, a couple floodings. The oil market kind of slowed down, so the housing market took a little dip. And then I actually got sick and was kind of out of commission for a couple months. And my dad passed. So all that combined, when I came back to it, the market was a lot different. In the area I was renovating in, I mean, the floods kind of changed that whole area. The market was a little bit different. So I chose to really start wholesaling back again and try to figure out where I wanted to go. And I didn't go back to renovating. I built a wholesaling company and eventually sold it to my partner in a little over a year ago. But in 2017, 18, I started getting also involved with commercial real estate and dipping my toes into that and passively investing in a storage facility, apartment complex, and a shopping center with 3 different operators. So I could, get exposed to 3 different asset classes with 3 different management styles. And that kind of gave me a taste of which direction I wanted to go or spend more time in. And I ultimately chose the main one to be storage. I didn't want to spread myself too thin. And yeah, I've been enjoying working in that industry. The people are great. The business is great. I'm learning every day, have some passive investments. Some of them I've sold. I have an active facility about two hours east from my house and closing on another facility here, fingers crossed, today in Magnolia, which is a lot bigger facility. And that one is with a partner. So yeah, I'm just looking forward to it every day and just trying to grow as a person and my portfolio at the same time.
That's very interesting. We're gonna get deep into your new business venture. But before we do, I'd like to maybe ask you about why did you decide to go from wholesaling to storage? Because I remember when you guys were doing wholesaling, I mean, it seems like every day I receive deals from you, through email blast and all. So it seems like you had a successful operation. So maybe tell us a little bit about that and then why you decided to change.
Well, yeah, it was, wholesaling has its ups and downs, has its peaks and valleys. And I was dealing with residential for quite a while. And, wholesaling is, I would say, the quicker money. And I was looking for something that also I could grow into and, get more of a passive role. Because as you know, wholesaling and even renovating, you got to go hunting every time. And once that deal sells, you got to go find another one and another one. In storage, it's a slower build, but you have the choice whether you buy it, you expand it, you know, get it all filled up, and then you sell it for a bigger pop, or you keep it and then it turns into more of a passive style. I mean, I wouldn't say it's totally passive because I never want to be one that doesn't have my eyes on the business. So that was one reason I wanted something that would be a little bit more passive and not as active every day, every day, every day. And wholesaling, while you can scale, you got to be on it every day, whether it's you or your team. I mean, there's good money in there, but there's also a lot of money that you spend in advertisement. And if you don't do it right or have the right people, you're gonna go with those big peaks and valleys. And it's good. It was good for the time being, but I also wanted to grow myself and venture into new different areas. So a little bit of both, more passive and a little bit more of learning something else.
Yeah. So, what was the biggest challenge when you decided to make that change, like to go from wholesaling to storage?
I guess not having that quick income. I mean, I'll still do deals on the side for the quicker income, but yeah, it's not like you have, you know, all these cash flows coming in and deals are closing, because storage again it's slower, and you're working for the long haul. So that's take a little while to get used to, and you just organize your income and your savings and transitioning, because at the same time you're building, you still gotta eat.
Yeah. Can you give us an example of what a typical deal look like in the storage space?
So I don't know about typical, because it's all they vary a lot. I can tell you my first active one.
Yeah.
So again, I use my wholesaling experience to do the marketing, do the off market deals. I sent a yellow letter to a list of storage owners,
Uh-huh.
and you know, did that a couple times and got a couple hits. Got one hit, and then there was about three candidates that I was looking at, and one in particular that's got deeper and deeper. And so it was just over $1 million. The lady and her husband live right behind the facility. They're getting older, you know, not terribly old, but just want to retire. And the facility is 135 units, climate controlled. It was built in 2008 and 2015, I believe, 2 buildings, and it had roof at the back. But then she also was open to owner financing, which was, you know, is a plus.
Yeah, that's even better, right?
Yeah, because you don't really have to go through. She matched the interest rate at the banks.
Yeah.
And I go through all that paperwork, and the lender wants this, the lender wants that, and then they keep on asking for documents. So that was a plus, and she understood the reason on her end, because she used to own apartments. She understood that I got a good collateral. It's
Uh-huh.
her collateral that she's been running, so she knows, you know, it's worth something, and she's getting a lot better rates than she can get sitting in the bank. So I took several months to go ahead and close it from the first time I contacted her. Then we closed it. She still lives right behind it. I brought in a consultant to help me transition over from the new ownership and the new software and so forth. And that was a time saver, because I didn't know anything about how running a storage facility. And even though you read about it, and I had Scott Myers, you know, joined his, went to his event and eventually joined his mastermind. But, you know, until you actually are doing it, you can read about it. It's two different things. So she really helped me. She drove in and spent a week with me, and we transitioned everything. And then everything from there was kind of learn as you go. And it's, I mean, at the end of the day, it's really not rocket science, especially once you get the few things down.
Okay, so let's maybe get into a little bit granular detail. So you found the deal, and you had to obviously already use your negotiation skills that you got from your previous experience in wholesaling, right? And negotiate the deal with the seller?
Correct.
Okay. When you come to an agreement, obviously you had a buy-sale agreement with the lady. Is it a generic form like how we have, you know, the track contract, or we can really Google and find this contract, or is it something that you have to get an attorney to draw up?
No, so, you know, being Texas broker, I just used the TREC, partial improved, and then kind of added, you know, specifics to it, which you weren't much, you know, just certain documents or history or information that I wanted. And little things like, you'll help me transition with 30 days after, and I'm going to get your Google reviews, your phone number, your Facebook account, or whatever. Make sure that's kind of spelt out again, because that's kind of important, because a lot of it's done by Google reviews, whether people use this facility over this facility, if it's in the same mile range, if it's close by.
Okay. So then you close through a title company just like any other real estate transactions.
Yes.
Right. Okay. You mentioned that the seller did the seller financing for you. Did you have to come up with a down payment?
20%.
20. Okay. So is that where maybe either someone needs to have that fund? Because you're talking about $1 million worth of real estate.
Mm-hmm.
And so we're looking at 20% plus closing costs. So that's a huge chunk of money. Did you have to bring in partners? This episode is brought to you by Buzz Vacation Rentals, a premier property management company in Houston and Galveston areas. Buzz Vacation Rentals specializes in managing short-term rentals the right way. Give Buzz a call at 281-549-8432 to learn more, or check out their website at listwoodbuzz.com, and that is listwoodbuzz.com. Now, back to the Real Estate Ballers Show.
So I did a majority myself. I had some family members that wanted to invest, so I let them have a small piece.
Yeah.
I could have done it myself, but it's if I can leverage a little bit and also give them the ability to join in, I don't mind doing that. But so I didn't have to bring any outside money or hard money lenders in for this particular deal.
But even if someone was to go through, well, in this case, you got a seller, so the difference, she's owner financed it to you over whatever your agreed terms, right? I'm just thinking out loud of some other situations where the buyer doesn't have the fund that you do. Is that where they would go raise capital?
So let's say that same particular situation, if I didn't have the funds or enough funds, or you could go ahead and you could raise capital, or maybe get partners into your LLC and have them put up the money, but actually have them partake in part of the operation too. Or then you just be careful about the syndication rules and make sure you talk to an SEC attorney and blah blah blah, because there's a fine line where it crosses that you're syndicating and so forth. So that's one way. I mean, you get a hard money lender.
Yeah.
Other way, or you could actually do a full-blown syndication, but I think you'd probably want a bigger deal, I would think, because there's a lot more moving parts, a lot more expense, and to have a syndication. I've been on the other end of being a passive investor of a syndication. Yeah. I haven't put a syndication on myself. I think those are a few different options. And because I always tell somebody, if you have a deal, I mean, it doesn't always go this way. It's not like guaranteed, but if you have a decent deal, like in wholesaling or houses, you can find some good people with money. There's a lot of money laying on the sidelines ready for a decent deal. But then again, you got to choose your people right and make sure you guys are compatible and trust each other.
Yeah, I think that's very important. So from the time you got under contract until when you closed, how long did it take?
So I gave mine, since it was my first active one, I think, I don't exactly remember, but I probably did like a 60-day feasibility and a 30-day close. Just to learning time and making sure that, I wasn't really crunched for time.
Yeah.
Main thing was keeping in contact with the lady and doing what I said I was going to do, and constant communication, because she appreciated that. Because I actually did get a testimonial from her, and I'll probably post it, one of these days when I get it all edited, about why she chose me, why she chose to go seller financing. Just so if any other owners that I'm approaching have any, resistance to seller financing or selling to me, I could say, well, here's a testimonial. I bought it from this lady. This is what I've done. This is why she liked seller financing. Mm-hmm. So communication, I think, was big.
So how did you come about determining the value of what it's worth so that you know what to pay?
Okay, so there's some simple, and then some different guidelines that other people use, and then the basic guideline I was using was a cap rate. Well, one, I want to make sure that the area is somewhat stable, that it has a little bit of growth. Mm-hmm. You want some sort of income level, $100,000 and up of median income. You want some population, size, whether it be 100,000 people or up. Some of these don't have to hit. Also, you want to make sure that it's not too much supply. So you check those things out, and not all of them have to hit, but then you have to have a good field. Kind of just base it off of that. But the cap rate, I think I bought that one, I would say it would probably be like a 9 or 10. So, what that means is you take the income minus the expenses, and you get net operating income, and then you divide that by the cap rate, and then that should be your price.
Okay.
What you think you should pay for the facility. And that was about, for those facilities, that was probably about right. Now like the bigger facilities these days, like public storage stuff, there's some of those are selling for 3 cap, 4 cap, which are, the lower the cap rate, the more expensive the facility is.
Can you identify how you calculate cap rate real quick, just for the audience?
You kind of want to just get a feeling of the cap rate. The market kind of dictates, at least from my point of view. Again, everybody has their own method, and I try to simplify it for myself. You kind of get the going cap rate in the area for the asset class. So what things are selling or what things are being listed at. And that's where you say, okay, well, I'm getting a decent cap rate. And then I always try to give myself a cushion and even get a better cap rate. Going in, not coming out. So if I go in buying it at a 10 cap, I want to sell it if I can sell it at a 3 cap, then that's great. So basically, and then every market's going to be different. I mean, the cap rate here compared to Miami or Orlando or New York is going to be different, especially in a primary or secondary or tertiary market. Houston proper, the cap rate is going to be lower, so things are going to be more expensive. But if I go to these small towns, they're going to be, cap rate should be a little higher, and the size of the facility too. Smaller ones usually are a little higher cap rates, which means not as expensive as like being in downtown Houston with a low cap rate.
So this cap rate, I know when you get into commercial real estate investing, a lot of people just throw out cap rate or, mention cap rate. But where I feel like things getting complicated is everyone calculate cap rate differently. Do you agree?
Yeah, everybody has a little different view of that. I mean, the basic principle should be the same, but yes. But then also the cap rate shouldn't be the only thing that you go off of, because the cap rate might be, okay, it's reasonable like everybody else is doing, or maybe I'm getting a little bit higher. But if everything else doesn't look good, then it's still not a deal, because I want to make sure that I'm covering, getting cash flow day one.
Okay, I just Googled what's cap rate, right? And it says net operating income divided by market value, current market value, gives you cap rate.
Yeah.
Okay, but if I don't know what the current market value is, how do I calculate my cap rate?
Well, you kind of reverse it. So let's say, and let me pull up my calculator here. So let's say you're getting $50,000 of net income. So this is income minus the expenses. And the expensive for this industry is probably like 30% is a rule of thumb.
Okay.
Get it down here to make it easy. $100,000 gross is what you're collecting. And you minus 30%, which comes down to your net operating income of $70,000, right?
Okay.
I know the cap rate around this area, let's say 6%. Divided by 0.06. So it comes to about 1.1 million. I wouldn't want to pay more than that. Start below.
Okay. So the income is basically what the current seller is collecting from all the units.
Correct.
Right. So your objective is to buy this asset, storage unit, building structure, and then maybe improve it by improving the rent rate or improving occupancy rate so that you can improve the overall value. Is that right?
Yes. So I guess the basic premise is the value add.
Uh-huh.
So one, you can increase rates if they're not charging the current market.
Yeah.
Two, you can decrease expenses. There's probably, every little bit counts.
Uh-huh.
Whether your electricity bill, changing the LED lights, the staff or use no staff, or remote operate it, insurance that you buy, any maintenance, and so that's another. And then also expand. If you can expand, that's what I like to look for. Is now I get a chance to build more facilities or add portables, And then you can also add the tenant insurance and some ancillary that helps it. But yeah, that's the way you try to do it, is just increase the income and reduce the expenses one way or another.
When you talk about expand, are you going upwards or outwards?
Wider for now, as far as I know, once you have a existing building, it's hard to build on top of it unless a lot of things are done. I haven't experienced that yet. So right now, wider, and I'm dealing with secondary markets, tertiary markets. I have a little bit more land than, if you're downtown Houston, you got to go up. So I haven't gone up yet, just more wide.
Okay. So is there a website or places, okay, so in residential, you go to MLS, you look and you can determine the value. Do you guys have something like that for storage?
So it's more of commercial. There's LoopNet, fine, and then there's Crexi, CHREXI.com.
Okay.
Those are the two that you'll see the listings. Now it's a little bit difficult to get actual hard comps like the MLS. So you get exactly, what they bought it for and blah, blah, blah. They don't collect data as good as the residential side, but you can get a feel of talking to the brokers and seeing what they're listing it as.
Mm-hmm.
And then also, Facebook has been huge in a lot of people's personal and business. So there's self-storage groups on Facebook that I've learned a lot, can communicate a lot. And then we have a Clubhouse. Every week we have a Clubhouse show, 9 a.m. Central Time. And then we also created a Facebook group where we can continue to talk about storage or the speakers that we have.
Yeah, do send me links for those. I can include them in the show notes.
Sure.
Yeah.
And invite anybody to come. I mean, we have all different sorts of speakers, different range of audience, people that have been in the industry for a while, people that have never done any storage, or people wanting to do storage.
So what are some of the things that for an investor who want to get into storage building, what are some of the important things that they should know or mistake that they should avoid?
Well, I don't know if it's storage specific, but I think it's more maybe business or commercial specific. My point of view is one, get educated the best you can, whether that be through classes, mentorships, reading, the forums. And then also I would get close with someone that's actually doing it. So you kind of I want to be where that person is, try to get to know that person or somebody like that person, and ask if you can do this, this, and this, because there's no better way to learn while doing. And also, if anybody asks some people, how do I get in? So I say, well, try to find a facility that meets, one of these operators' needs. And then even if you take a small piece, the education itself of the whole deal is huge. Because right now, I went from one facility at 1 million, and then now I'm probably 6-7 times the next facility. But I have to do that now with reaching out to people that are more experienced and are at a different level. So that's where partnership comes in. A little bit more in this industry or commercial itself, I think partnerships are more common rather than residential. But yeah, just educated, surround yourself with those kind of people. Go to the self-storage association. Each state usually has at least one a year, and they have I think 2 or 3 national ones.
So you do marketing for them in a similar way, because you mentioned earlier, in order to get any deals, you got to have a way to find deals, right? And you mentioned that you did direct mails. Did you do anything else besides direct mails?
I did direct mail. I did a little texting and cold calling. Those got some traction, and there's still some leads that I've been still talking to. But the one I closed on was a mailer, and then the next one was from a broker. Again, there's not as many storage facilities compared to single-family homes, so you kind of have to use all avenues.
As far as pricing go for a unit, like you mentioned, one that you bought was for $1 million, and then another one is in the 6 millions range. What is normal? Is there a medium price point? Are they higher in a higher end area? I guess it all really come down to the real estate underneath, right? If the real estate piece is worth more, then the facility is worth more. But I would imagine a storage unit in Houston is probably way less expensive than a unit in New York.
Sure.
Is there a price per unit? Give us an idea.
I don't really go by price per unit. I guess it's one of the factors I look at, but I mean, I don't really have a general rule of thumb or per square foot. I mean, usually you want to try to buy it less than what it costs to build new, and that's changing per square foot. Building could be anywhere from $40, $50 a square foot, not including the land cost. Now, then you got to see if you're doing climate controlled or non-climate controlled. So, like for instance, let's say $1 million minus divided by 135, the first facility I bought. So that's like $7,400 per unit. That seems reasonable, but seen some that are like $20,000 per unit. That can still work depending on how much income you're getting. Yeah, it's a little bit kind of a mixture of factors. I'm only getting like, let's say 10 by 10, I'm getting $100 per month. But in Houston, they're getting $150, and New York, they're getting $250. So then you can pay more per unit. So that's relative on how much you can bring in, also a charge for that unit.
Okay. So it's more of what you can get out of that.
Yeah, that's my point of view.
Okay.
Okay, I can charge, the maximum I can charge right now is probably this.
Okay.
Now, can I work it backwards and see if the numbers are making sense?
Where do you see the trend is going in this industry?
It's getting a lot more competitive. Several years ago, some of my friends, it used to be self-storage kind of used to be like the stepchild. Now it's kind of, out there on top.
Yeah.
With industrial, just given, COVID, the hotel industry, the retail industry, the office industry, people need to put their money somewhere. I think multifamily is still strong. Industrial is up there. Storage is up there. So it's just, it's getting a little bit more competitive, but I mean, there's still, room. Just kind of do your homework and kind of just be careful. And, that's why I don't play where public storage plays, because they're just too big and powerful.
Define public storage space for us, please.
Oh, that's like downtown Houston, within the loop in Houston, just very dense in, primo markets, because they can, for instance, I have a friend that works for one of the other big outfits, not public storage, but he says public storage people that he knows, public storage can go into a place and build a building, and they can lock the doors and not open it until they're ready to.
So you're talking about the company called Public Storage?
Yes.
Okay, I'm sorry. I was thinking like public service. Hello, V. Okay.
Public versus private. Yeah, no, public storage is a company.
Okay. No, I got it now. Like you said, it's getting more competitive. Now you're talking about entry level of $500,000-$600,000 or $1 million and up. That probably reduced the number of people, like just like in real estate, in single family, right? Nowadays it gets so competitive that every appointment you go on, they have 20 other people lined up behind you. Do you find that same situations in storage?
Yeah, maybe not that extreme, but it's still relative, because let's say there's 80,000 storage facilities in the US.
Yeah.
That could be close to that number or way off, but I think last time I heard somewhere it's around there. But I mean, compared to millions of homes. So
right.
When you go to a storage unit that's, kind of maybe 100,000 square feet with, a good size, and it's in a good location, making money, you're going to get multiple offers in this market. And yeah, maybe the first day. I mean, I don't know about 20 or 25 people, but I would say not being surprised by 5. So it's kind of prorating it in relation. It's pretty much similar. So
what do you plan to do with these facility? Do you hold them for an X period of time, or do you wholesale right away?
No, these I'm going to hold.
Okay. Do you have a plan of hold them for a year to 5 years, or?
No, so these are probably 10 plus years. Get to a point where the income is more passively, where you don't have to go hunting all the time, and just kind of build it that way. And then maybe, later on, or maybe some deals you'll do a quicker sale, but the intention is to hold it. So
where do you see yourself next, Luke?
Well, hopefully I'll have a lot more facilities under my belt, and maybe outside of Texas.
Yeah.
Right now, I want to. I'm staying close to home, because I actually manage it, and being able to. Not that I'm there every day, but I have my eyes on it every day. And just, yeah, growing. Keep on growing and learning and adapting.
All right, maybe next time we have you come back on a continuations of this episode.
Yeah, that would be great. Thank you, V.
Yeah, so I'm changing subject. What is the one thing that people might be surprised to learn about you?
Oh, I think maybe half the people know, half the people don't know. I was born in Jamaica.
Okay.
So there's a small Chinese population down there. I mean,
Do you speak Spanish and Chinese?
I speak a little Spanish, but in Jamaica they speak Patois, which is kind of like a broken English. But I learned Spanish from living in Miami.
Oh, is that so? Isn't that interesting, huh? All right. So, where can people find you?
I'm on Facebook under Luke Wong. Instagram's at Luke Wong 2000. They can. I have a website. It's Luke at 9milecapital.com. So Luke at 9milecapital.com, and I still have LukeBuys.com website. So that still has all the information to get to me.
Thank you for watching the Real Estate Ballers Show. If you found value in this show, give us some support. Like us, subscribe to us. Help us get the words out by sharing this episode with a friend, or give us a shout out on social media using the hashtag REBallers. Lastly, leave us a comment below. Let us know what you learned, what's working, or what's not working for you. See you next time.